Hey, what's going on, folks? Welcome to the video. This is Chris from Verlo Trading. In today's video, we're going to talk about trading the US dollar. So how to trade the US dollar, or why would you even want to trade the US dollar? So that's where we're going to start. And if you enjoyed this content, don't forget to smash the like button. So let's get to it right here. All right, so what you're looking at here on my screen is the DXY, the US dollar currency index on a daily chart. The US dollar index, or informally the DXY, is an index or measure of the value of the United States dollar relative to a basket of foreign currencies, often referred to as a basket of US trade partners' currencies. All right, the index goes up when the US dollar gains strength when compared to the other currencies. All right, so this is what the DXY is right here. You can see we're 57.6 weighted in the euro, and then 13.6 weighted in the yen, and then slightly less in each of the other currencies here. So we can clearly see here that we're weighted majority in the euro. Now, this is interesting to know that the DXY is weighted in these 6 currencies here, because a lot of traders oftentimes when they want to gain exposure to the US dollar long or short, you can actually look at the euro and potentially trade the euro as well. If you look at the two charts, you can see that they're almost identically inversely correlated. However, they're not quite the same thing. And that is one reason why you would want to trade the DXY instead of trading the Euro FX futures to gain exposure to the dollar. All right, so I put them side by side here, and you can see this was the 30-minute chart on the DXY, and this is a 30-minute chart on the euro. And you can see that they're not the same thing. They're not inversely correlated here. It's two different products, but they have a strong correlation. So that being said, how would you trade the dollar? What products are available to you to trade the dollar? Well, the most popular product trades on the ICE exchange. And the symbol I'm going to compare it to is the SFX, small US dollar, on the small exchange. All right, so we're going to do a few comparisons here in this video. If you're still on the video and you're not already bored, then smash a like on the video because it really helps with the YouTube algorithm. Before we start the video, I want to point out something interesting I noticed about the dollar. So if we look at the NASDAQ here trading at all-time highs, and then we go ahead and look at the DXY futures, something that stood out to me at least was that the dollar got boosted up after the FOMC last week, and risk assets took a nosedive but then saw a strong recovery. Now, with the NASDAQ at all-time highs here today, top tick basically 420, Illuminati confirmed. What stood out to me was that the dollar has only been seeing a light consolidation in the face of risk assets seeing a strong rally up. So the fact that the dollar is kind of strong, for me, that symbolizes that investors are potentially viewing this market as being slightly frothy. Okay, so let's look at the US dollar futures here. I want to tell you a few things about the product to start with in case you didn't know it. So let's go over here. The notional value of the DX, or the US dollar index, is 1,000 times the index value. So right now the value of this thing is 91.795, but I'm actually going to round it off to 9180 times 1,000, and that tells us that the notional size of this contract is roughly, give or take, about $100,000. Okay, so the first thing that I'm noticing here that's a bit of a problem with the DX, I'm going to share it with you as I'm seeing this right now. So look at the price ladder on the DXY here. Look at the 3 decimal places here. We have 820, 819, 818, 817, 816. Now go ahead and look at the price ladder for the DX, which is the actual futures contract here. And you're going to see that the minimum tick increment is a little bit different here. Look, 40 to 40 half, to 41 to 41 half. Whereas on the actual dollar index, you had 10 price increments between 91.81 and 91.82. You can see that there's 10 increments. Now, if I go over to the DX futures, between 81 and 82, there's actually only 2 price increments. All right, so now the dome recentered itself, but just take a look at the price ladder and you can see exactly what I'm talking about. So 35, 35, 5, 36, 36 and a half to 7. So what we're seeing on the DX futures is that the minimum tick value is actually smaller than the minimum tick value on the index itself. And that's a little bit problematic. That kind of reminds me of the quarter crude oil contract. It also moves in these 5-cent tick increments, which is a little bit odd. Okay, so now that you understand that, I'm going to give you an example of how we're going to calculate a range of the market and determine how much that's going to be worth in dollars. So we're going to use this day as an example right here. So I've got my cursor over June 18th, 2021. And you guys already know that the minimum tick value in the DX is $5. So from 91.43 to 91.43 half, that's going to be $5 movement in your account. We're going to make it even simpler and say from 91.40 to 91.41, that's $10. So for every cent that the index moves up or down, That's going to be $10. So now we're going to look at the range of this bar here, June 18th, 2021. So the low of the bar was 91.80.5, and the high of the bar was 92.39.5. So I'm actually going to round that off to 91.80 as the low and 92.40 as the high. 92.40 minus 91.80 equals 60, or 0.6. As we previously established, the 1 cent movement in the DXY, that's going to be a 2-tick movement in the DX futures, or a $10 movement in our account. So what we're going to do now is 10 times 60, because it's a 60-cent range, and that's going to tell us this range here is worth $600. Are you guys with me here? Cool. And we can also use our fancy measuring tool in TradingView to determine that about 60 cents is worth about 0.65% a movement there. So now I'm actually going to go over to my other screen now, and we're going to compare this to the small exchange product. All right, so this is the chart for the FX SME. I'm using Interactive Brokers to display this chart. So this is the contract, the small US dollar on the small exchange. It's supposed to correlate exactly to the DX. All right, so the first thing I noticed with this chart here is that I guess since the small exchange is not open 23 hours a day, there is some prices missing right under here. I'm going to use the measuring tool in TWS now to measure about 0.6% there on that June 18th day here. And it's going to line up with about 145.53 from the high of June 18th. So that's exactly what I did. I just measured from the high of that bar until it gave me 0.6%, and the amount I got was 145.55. Let's round it off to that, okay? So that's going to be the range we're going to use to show the dollar movement with this contract now. 146.47 minus 145.55, and that's about a $92 movement in this contract right here. This is how much your account would move if you were long or short one of the small US dollar futures. So, if you just compare the basic notional size of this contract here, 14,600, and notional size of DX is just under 100,000. So you can see how the math adds up to be pretty close there. So what we're able to determine here is that the small US dollar future is about 1/6 of the size of the DX. And now don't forget, all the products in the small exchange all have a $1 tick value. So that's really a pretty easy way to manage your risk, because you can look at the chart and you can say 145.50 to 145.70, that's $20. All right, you don't have to do any extra math in your head to figure out the movement in your account or how much actually you're putting at risk. All right, let's talk margins very briefly. So small US dollars, you can see the exchange margin here is $182. Now, some brokers have higher margins. I always look at Interactive Brokers because they have some of the highest margins for futures out there. I'll be honest with you guys, if you did want to trade this product, I'm not sure if I would do it through Interactive Brokers because their margins are a lot higher than other brokers. So take a look at that. So look, small US dollar here, the initial margin is $819, whereas the exchange margin, like I just told you, was $182. And what that $182 means is that the exchange is only requiring you to have $182 in your account to buy or sell one contract. Let's take a look at the DX here real quick. Interactive Broker's initial margin for the DX is 2,541. So give or take, it's about 2/3 larger than the small exchange contract. If I go over to AMP Futures and take a look at their DX margin, we got 1,900 there. It's roughly in the same ballpark there. Now AMP Futures doesn't support the small exchange yet. I hope they support them soon. All right guys, so in this video I just wanted to show you a little bit about how the US dollar futures work and some options you might have if you want to gain direct exposure to the US dollar index. If you enjoyed this video or found it educational, don't forget to leave a like and subscribe to the YouTube channel. Catch you in the next one. Take care, bye.